Let's get right to it. All right, we're going to talk about auto insurance yet again, but this time I'm coming to you to talk about how I wish the discussion were held when people were speaking with their insurance agent. Okay, so you bought your insurance. I don't care how it is that you came to buy the insurance. Sometimes it's I was buying a car, so I had to make this real quick deal, so I got what I got, or I bought a house and this is what was presented to me, so I just took it. Or I've been driving for a long time, and I know what I need, and I got what I need, right? And those are typically how people come into getting their auto insurance policy. But what I experienced back when I was in production, full disclosure, I am a licensed agent. Although I am not in production, I do not sell auto insurance policies or life insurance policies or any of the other things that I'm licensed to sell. I decided that I just did not want to continue to do that at this time. So all I'm giving you is information and my opinion. So when I would speak with people about insurance, oftentimes I would find that because I'm interacting with them typically as a service manager or in a service role, people have more time. And I was able to share with them some of the things I'm about to share with you right now. Because at the moment of the sale, unfortunately, people go in a hurry, or they feel intimidated, so they don't know what to look for, so they just want to get this thing over with. Or they're just sold something. But always, at least in my experience, back when I was in the production side of it, they're just in a hurry. So now, this is a video. No need to be in a hurry. We can talk our way through this. Now, as we go into it, I'm going to talk about first something that I think lays the groundwork to auto insurance, which is your bodily injury coverage. It's a lot of things that your policy does and can do. And I'm not going to touch on all of them because each state can be slightly different, because each state has different rules in many cases, and how they treat their coverages can be different in some cases. So you want to make sure you are consulting your policy and that you go and sit down and talk to or get on the phone with your agent. Part of the premium you pay is to have access to someone that can explain what you bought. And that doesn't have to be when you first buy it. That could be at any time. That's what your premium is helping to pay for. This massive insurance company is being supported by your premiums. Okay? You're one of many paying premiums. So don't get ahead of your skis and think that, hey, I pay your salary, buddy. No one likes that. Don't do it. If you're that person, stop it. Don't do that. All right? But when I'm talking to you about auto insurance, I said I'm going to keep this short. So here we go. First thing I want to touch on is when we're talking about basic bodily injury things, like just what you need to know that hopefully you know, but you probably don't know, right? Minor injury. All right. So when someone's in an accident, say it's first, it has to be, oh, it doesn't have to be. I'm sorry. First, let's say that it's your fault. You're liable. That's why it's called liability insurance, right? What are the things you are deemed to have been negligent or at fault for, therefore you are liable for, okay? And the biggest exposure, in my opinion, is bodily injury. We've all had the little weird, silly discussions with our friends. If someone needs so much as bumps into me, I'm going to fall on the ground and start twitching and, oh, I hope I have Alka-Seltzer. What? Look, it's silly, But there is a major component of insurance that has to deal with fraud. When someone decides that what they are actually entitled to, they want more than that, refer to the prior video, then that's fraud, people. Okay, because insurance is supposed to make you whole. But people see insurance companies and they say, wow, deep pockets, I'm going to get them from everything I can. Well, when people do that, that means there's more claims. And not only are there more claims, there's more expensive claims. And as those claims continue to flow in from various places, that's the cost of insurance going up. This is one of the major reasons why our premium continues to go up. There's also catastrophic losses. You think about what just happened in Florida with Hurricane Nicole and the one that was just before it that really tore up the state. You think about those. Every car that was flooded, tossed, damaged, crushed, those are all claims. And the insurance company has to pay that. And they have to pay that with what? Premium dollars that they've accumulated from everyone. And then they have to go back and pay. Well, that means that one hit is so much more than they could have expected or quantifiably prepared for. So that money is going to have to come back to them through, you guessed it, premium. But I'm going to dial that back. And we're going to talk about this. And this is where I'm talking about basic bodily injury, things, rules of the road. So there's three basic classes or legs of a bodily injury claim. You're driving in your car. Most common scenario is you rear end someone, right? Because we basically can agree that if you rear end somebody, except for in very rare cases, it's your fault. So a minor injury claim will involve things like a cut, small cut, bruises, your muscle sprains and strains, and even localized minor burns like your airbag burn. It's probably the more common one. Then we move into moderate, and you're going to see that these kind of sit in the middle because the thing about a claim is it's highly subjective. It's dependent upon who got hurt. Because some people get hurt worse than others from the same situation. So moderate injury, sprains and strains, broken bones, arms and legs, minor head injuries. And then you have your serious ones, right? Catastrophic injuries like death, disability, spinal cord injuries, things that probably are not going to heal all the way, or you're dead, right? These are your big ones. And see, the thing about an insurance claim, or the thing about a bodily injury coming from an accident, is that you didn't mean for this to happen. But that doesn't matter because the other person is now injured, and you don't get to decide how injured someone else is. You're just responsible for trying to make them whole. And so you pay insurance for the insurance company to help with that. So if we take back the scenario where people say, oh, if I get bumped, I'm going to act crazy and I'm going to get them from all I got. Or you go to someone who is otherwise perfectly healthy, and because of your accident, now they will permanently have an injury to their neck, or they have spinal cord type injuries, right? I don't know about you, but I can't write a check for that. Your insurance company is what you have to help with that. So once we get that little bit of an understanding in place, we can move on to what do the settlements, right, typically look like. This is not all-inclusive. This is not a hard and fast. This is just for you to put in your mind what this looks like. So minor injuries can, $65,000. Yeah, I can remember writing some checks to people when I was a claims adjuster that was around there. Moderate, definitely that 150,000, that $150 as we say. Yeah, that's real. Now, 65,000, that's probably more than your car is worth. 150,000, it may be what your house is worth or close to it. So that's a lot of money. You look at your 401k, do you have those numbers sitting there? And if you do you want to use that for this as opposed to your retirement? So Bodily injury settlements get really expensive. Serious injury, 350, it can go higher than that, folks, depending upon how many people were hurt and how bad they were hurt. And you don't get to decide that. Okay, so this is why it's super, super, super important that we keep these things in mind when we're talking about insurance. See, it's not just going in and making a transaction. It should never be driven by price. Don't fall for that trap. Okay? For one thing, the cost of everything goes up every year. It just does. For another, you have to keep in mind that you're paying for a limit of coverage. How much do you want someone else to chip in to take care of something that happened because you had an accident, your wife has an accident, your child has an accident, someone you're responsible for in your household has an accident? And there's a whole nother discussion for how you need to treat your insurance policy discussions, but this is about this part of it. So keep these things firmly in mind, because I don't want you to get caught in the middle of trying to save money on your premium and being exposed as far as your assets. Because if you're responsible for an accident, that other person's not going to try to hear your sob story. They now have their own sob story and they need to be taken care of. And if that means putting you in bankruptcy, if that means you having to cash out your retirement to try to pay a settlement, if that means your money being garnished out your check that you already barely can function off of, and now somebody's taking a chunk of that from you too, please believe me, paying a little bit more in premium each month is far better than paying a whole lot in a settlement. So that's that part. Now, let's talk about coverages. Okay? So now what I'm going to talk to you about is the different coverages you may see on your policy. And the first one is which I was just talking to you about, because it's one that's near and dear to me. I've seen people be completely devastated because they had what would be pretty much a minor accident, but that other person had, $50,000 worth of medical expenses, and you just ain't got it, and you don't have enough coverage. So what you see in front of you is just an example. Okay, liability insurance has basically your bodily injury and your property damage. Think of liability as what am I liable for? Okay, if I hurt someone else or damage their property. So what you see as an example here is 100,000, 300,000, 100,000. That's the way you'll usually see it written out on paper, like 100, 300, 100. Your state may have different minimum limits. Word to the wise, don't ever get minimum limits. Go higher than that. Find where you can afford to be and get there, and then find a way to get more. But because it's better to use the insurance company's money than yours, I promise you. But this is what this means. Bodily injury, 100,000, 300,000. That means it's $100,000 that the insurance company that you have set aside for the insurance company to use to settle a bodily injury claim for someone that you are responsible for their injuries, up to one person. 300,000 is same thing I just said, but it's for all injured parties that you're responsible for their injuries in that same accident. Okay? So it won't go higher than 100,000 for any one person, and it won't go any higher than 300,000 total. 100,000, as we just saw a moment ago, that'll get you for one person over the minor point, but you'll be exposed to the moderate to severe part. So govern yourselves accordingly. Property damage, 100,000. Okay? People oftentimes think of property damage as, okay, well, as long as I don't hit a car that's worth 100,000. No. It's more than that. It's you hit the car. Inside that car, there was, expensive pair of glasses. picture for, I don't care, anything physical in the vehicle that you damaged as a part of this accident. Also, let's say you rear-ended that car and it goes off the road a little bit and hits someone's fence and their tree. Okay? Now that $100,000 in property damage has to cover the car that you hit, the fence that it hit, the grass that it tore up, any flowers that it might have tore up, and the tree that it hit. All of that. So anything that is coming as a result of your accident that this wouldn't have happened if not for you, you're responsible for. Medical payments coverage. This is a first party coverage, right? So medical payments coverage is different than bodily injury coverage. Similar family, not the same thing. So you oftentimes hear that called med pay. This is the coverage regardless of fault. It will kick in to help pay the medical expenses of you or any of your passengers in your vehicle. Okay? So that's like paying for an emergency room visit or something like that. It's not a settlement. It's to help with the expenses. Then you see your deductibles. So in this particular case, we're talking about comprehensive and collision, $500 deductibles. Now, prior discussion, I talked to you about what a deductible is, right? That's how much skin in the game you're putting in beyond your premium. So this is if something happens to your car, right? You don't pay for anything out of pocket for the other person's car so long as your limits are good. This is your car. Comprehensive is, we used to call it like acts of God, right? So this is like you hit a deer, a hailstorm, flood, that type of stuff. You'll pay the first $500. Insurance company pays the rest up to the adjusted value of your vehicle. Deductible for collision, $500. Same explanation, except for now this is for more of your like all perils type of thing. So, if you hit somebody and it damaged your car, someone hit you when it damaged your car, and you want to let your insurance company help you. Kid ran his bike into your car and you're going to handle it that way. Basically any damage to your car, right? On comprehensive, that's a minute ago. That one also includes things like theft and vandalism, okay? Roadside service. You need to really be careful with this one. It's really good to have. I think everybody should have some form of roadside service. It's just my opinion. But you want to find out how it works. So oftentimes there's limits to how often you can use it, or how expensive it can be, or how far it will cover you. So have that discussion so that you can determine whether or not it's best to have the roadside coverage through your policy, or if perhaps it's a newer car, you might have gotten it through the dealership, might be available through your credit card, may be available through your lending institution. There's so many ways to have roadside assistance. So you just want to make sure that you're getting the benefit that you need the way that you need it to be. Car rental and travel expense, a similar discussion, right? It's not your normal rental that you're probably thinking of. Oftentimes you think car rental, you're like, okay, hey, if I get into an accident and I need a car, this is how I get a car. Yes and no. So car rental is more like, first of all, to use your rental coverage, and it may vary from carrier to carrier, right? Hold that expression for everything I say, because it does. A lot of things can vary from carrier to carrier. But oftentimes, in order to use this, you have to be using your policy for damages to your vehicle. So if the other person's at fault and you chose not to file through their insurance company and file through your own, then you can use your rental coverage. If the other person's at fault and you choose to file through their insurance policy, then your policy almost certainly will not allow you to use your rental coverage. And there's reasons behind that. I mean, basically, when you get into the repair aspect of a claim, it can take time and it needs to be managed effectively. Well, if I have you sitting in a rental car, but I don't control your repairs, I don't have any ability to control how long you're in that car, right? So that's one of the reasons insurance companies are like, wait a minute, if I'm handling the damage, I'll take care of the rental. If I'm not handling damage, you need to go to the person who's handling the damage, okay? And then you see here 80% per day, $1,000 max. So Some companies will have a dollar amount. You'll pick $30, $40, $50, right? Keep in mind what current rates are for renting a car. You getting a car for $30 a day, good luck. So whatever limit you pick, you're going to pay the difference, but they'll pay that first part. In this particular case, they're saying, hey, you can pick any car you want to within reason, right? You're not going to go rent a Maserati. But if you drive a minivan, go get a minivan. You drive a truck, go get a truck. But you're going to pay 20% of the daily cost of that vehicle. And the maximum that we will pay is $1,000 maximum. So don't come to me with a $1,200 rental bill. No. Once we hit $1,000 on a rental, you're out that car. Or you need to pay for it yourself. So keep that in mind as well. Have a real conversation with that person that you're buying insurance from. And if you're buying your insurance online, well, your agent is only as good as the agent you choose, right? So if you chose not to have an agent, then you're your agent, and that's how strong your policy coverages are going to be. How well do you understand insurance? Now, if you do get your policy online, that doesn't mean you're stuck. Just means call their customer service. They will have a licensed representative, almost certainly, do a coverage review, and make the adjustments where you need to. Uninsured motorist vehicle, I'm not going to go all into that. This basically is saying, hey, accident's not your fault. More often than not, you also need to be able to identify the other person so they can prove that the other person doesn't have any insurance or has insufficient insurance. And then you can use this coverage, which will have your insurance company take care of you as though you were the other person in the accident. That's a lot of words. So if someone rear ends you, but they don't have insurance, they're riding dirty, then your uninsured motorist coverage will take care of you, right? You'll become the claimant to your own policy. And bodily injury is also part of your uninsured motorist. Depends on the limits you choose. Usually they need to mirror whatever your bodily injury limits are, but they can be different. I'm a little curious when I look at this particular example because I'm like, why would you cover yourself less than you would cover someone else? Really, the money you're saving is negligible. So at least have as much coverage on yourself as you would on someone else. Property damage, well, you're kind of looking at that like, how much is my car worth? And if your car ain't worth more than $50,000, then you can probably go there, because it's literally going to be limited to your car. With some caveats. I mean, you could still be in a situation where the uninsured motorist hits you and pushed you, blah, 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 blah. But technically that's not your fault. So a case may be made that it's just going to stick it on your car. But have that discussion with your agent, go through the scenarios. An uninsured motorist usually has a deductible. In this particular case, $250. So, hey, it's lower than your collision or comprehensive deductible because it's much less likely that this is going to happen. And why not? If you aren't at fault, the last thing you're going to want to do is come out of your pocket for a full $500 deductible. So it's pretty reasonable to have that one lower. Discussion that I didn't really hit on was with your deductibles up near the top, your D and your G. So here's my thoughts on a deductible. When you're trying to figure out what deductible works for you, I would say, and I have said, at what point would you make a claim? See, oftentimes people carry a lower deductible because they're like, well, if I have an accident, it'll be hard for me to get $500. But it'll be easier for me to get $250 because most Americans do not have $1,000 set aside. Just don't. So they typically try to adjust their deductible. And they're like, okay, well, I'll get a low deductible. It'll be easier. I'll even get a $0 deductible. Don't do that. But people do that. And they're willing to pay more premium because lower your deductible, that's the more the insurance company has to pay. So the higher your premium. Okay. So you can do that, but here's what I kind of put in your mind. if you are driving an older vehicle, there's a thought that says, hey, if my car's paid off, I don't need collision, I don't need comprehensive. Maybe. Depends. Your call. But basically, let's say your car is worth $3,000 because it's an old car. It's 10 years old. It's only worth $3,000 now, right? Do you have $3,000? So you're going to weigh this and you say, okay, well, I can carry a $500 deductible. So if my car is a total loss, at least I get $2,500 back. That will help me put a down payment on a car so I can get into another vehicle and continue on about my way. Notice I took the $500 deductible out of your total loss settlement, right? So that's one way to look at it. So it's not necessarily as your car paid off. If your car's not paid off, you probably have a loan, so you almost certainly have to have this coverage. And now I'm going to gear the discussion to that. So what level deductible should I choose? Some things to ask yourself. What does your finance agreement require of you? Oftentimes it says it has to be at least 500. No, it cannot be more than 500. They don't want you carrying $1,000, $2,000 deductible because most people don't have $1,000. So they don't want you to have a high deductible, can't fix the car, and now the car you both own is just sitting somewhere, because then they have to come out of their pocket. And if they do, they're taking that car and they're going to punish you. So don't do that. So if your finance agreement says a particular limit, start there. How strong is your savings? If you have the ability to set money aside, right? Here's a trick of the trade. Start a separate savings account specifically for deductibles, homeowners, renters, auto, all in one account. And pick a small number, 25, 50 bucks, whatever you can afford. Send it there every single month, right? Once that account hits $500, you're now safe to have a $500 deductible. Keep pushing money in there. Once your account has over $1,000 in it, now you can look at having a $1,000 deductible, because now if something happens, the money is earmarked, pull it, use it. But until then, keep your deductible below whatever your savings is. But I don't typically say go below 500, but some people do. But keep that within reason, because the money you're saving on premium, it really only happens on the collision coverage. So basically measure your risk. Okay. But that's really it. I talked a whole lot. I talked longer than I even wanted to. I did not mean to talk to you this long. So that was me saying, hey, it's time to go sit down, get on the phone, go in person, talk to your agent, go through your policy piece by piece, ask for explanations, ask for examples, get comparing quotes, even if you're just comparing it with the same carrier. How much would it be if I'm at $100,000 for bodily injury versus $250,000 for bodily injury? Would I benefit from an umbrella policy? Can I get an umbrella policy? That's a different discussion. I'm not having that today. But wonderful policy to have, really important to have as a part of your insurance portfolio, and it's relatively inexpensive but tremendously powerful. So, but you have to have your bodily injury limits at a certain level before your carrier will even offer it to you. So have those discussions. Is it going to cost me $10 more a month to increase my limits? Or is it going to cost me $50 more a month to increase my coverage? Well, different considerations go in there, but where are you now? If your bodily injury limits are below even the example I shared with you, get to your agent now, because it's important to understand that this is your last chance to fix your policy before you need it. Because once you have the accident, you're stuck with whatever it is you chose. And I'm going to hit this last point. If you chose to have, I'm in Georgia, a state minimum limit of $25,000 for bodily injury, $50,000 per accident, and you hurt someone in an accident, and their bills are $50,000, and it's just one person. Remember, your insurance company is stopping at the level you chose to pay for. So they're stopping at $25,000. That other $25,000 is coming out of your pocket. And if you could barely afford to pay for $25,000 in coverage, you sure enough ain't gonna be able to afford to pay $50,000, another $25,000 out of pocket for their insurance costs. And if you don't, and the medical costs, and if you don't, they're coming for anything you own, want to own, plan to own, hope to own, all of that. Get to your agent, talk to them, get the explanations you're owed, get an understanding. This is Theus, Complex Mind, Simple Man. I appreciate you for watching this video. Please like, share, subscribe. If you got any value out of this, drop me a comment. I really appreciate it. And also don't forget that we do have our ongoing campaign to help fund our back to school program, where we stock the clinic with important items like underclothes, t-shirts, shorts, wipes, things that the clinic needs that's not necessarily in their budget. But thank you again. Y'all have a great day. Talk to you next time.